This video is about Mitsui Bussan's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. Mitsui & Company Limited is one of Japan's largest Sogo Shosha general trading companies. It operates in a wide range of industries, including energy, metals, machinery, chemicals, food, and infrastructure. Mitsui & Company is part of the Mitsui Group, one of Japan's historical zaibatsu conglomerates. Mitsui & Co. is one of the Sandai Shosha, which is three big trading companies, alongside Itochu and Mitsubishi Corporation. Fiscal year 2025 results and fiscal year 2026 business plan. For fiscal year 2025, COCF core operating cash flow has stayed strong, surpassing 1 trillion yen for the fourth year in a row. Thanks to this solid cash flow, Mitsui plans to raise the dividend by 15 yen per share in fiscal year 2026. However, in planning for the next year, fiscal year 2026, Mitsui has considered recent changes in the business environment. Although their base profit continues to improve steadily, they have set targets of 820 billion yen for COCF and 770 billion yen for profit. This cautious outlook reflects ongoing margin adjustments in their North American automotive business and the impact of factors like inflation, interest rates, and exchange rate fluctuations. Partly due to a decline in resource prices, profits decreased in fiscal year 2025, and the forecast for fiscal year 2026 also projects a further decline. FY2025 profit results year-on-year, segment comparison. For fiscal year 2025, total profit declined by 163.4 billion yen compared to the previous year, bringing it to 900.3 billion yen. The main reason for profit decrease was the decline in resource prices, particularly iron ore and metallurgical coal. Additionally, a drop in LNG trading profits, the absence of one-time gains recorded in the previous year. Mineral and Metal Resources segment saw a profit drop of 49.7 billion yen to 285.4 billion yen, mainly due to falling prices of iron ore and metallurgical coal. Energy segment experienced a significant decrease of 108.2 billion yen in profit, down to 173.5 billion yen, primarily because there was a one-time profit in the previous year and a decline in LNG, liquefied natural gas trading profits. Machinery and Infrastructure segment recorded a 15.8 billion yen drop in profit to 232.9 billion yen, mainly due to weaker results in the automotive sector and fewer gains from asset sales. Chemicals segment was one of the few segments to grow, with profit rising by 36.7 billion yen to 75.9 billion yen, driven by strong performance in the methanol business, gains from financial instruments and asset sales, and improved trading. Lifestyle segment saw its profit fall by 40.4 billion yen to 53.7 billion yen, mainly due to the absence of the previous year's valuation gain on AIM services and reduced profit from coffee trading. Innovation and Corporate Development segment profit increased by 33.5 billion yen to 87.3 billion yen, mainly thanks to the sale of a rental property in Japan. FY 2026 Business Plan. Profit year-on-year, segment comparison. For fiscal year 2026, Mitsui plans to achieve a profit of 770 billion yen, which is a decrease of 130.3 billion yen compared to the previous year. This decline is mainly due to lower iron ore and metallurgical coal prices in the Mineral and Metal Resources segment, higher interest expenses related to the acquisition of Rhodes Ridge, which is a large iron ore project in Australia, a drop in LNG dividends and crude oil prices in the energy segment, and the absence of asset sale gains that were recorded in the previous year in the Machinery and Infrastructure and Innovation and Corporate Development segments. For fiscal year 2026, profits are also expected to decline, mainly due to the continued drop in resource prices. Americas and U.S. business. Due to growing interest in the effects of U.S. tariffs and policy changes, Mitsui addressed its U.S. operations. In fiscal year 2025, profits from the Americas totaled about 300 billion yen, with U.S. business consisting of three categories: domestic operations, exports, and import sales. Among these, domestic operations contributed the most profit and are expected to be less directly affected by tariffs. However, tariff policies still impact the broader economy, increasing uncertainty. As a result, Mitsui will closely monitor changes in the business environment and take defensive actions as needed. At the same time, it views these changes as opportunities to make use of its global network and strengthen its trading capabilities. While some other Japanese companies are significantly affected by U.S. tariffs, Mitsui appears to be relatively less impacted. Shareholder returns policy. Mitsui plans to raise shareholder returns to around 50% of forecasted COCF, core operating cash flow, over the 3 years of its current medium-term management plan. For fiscal year 2026, the annual dividend per share will increase by 15 yen to 115 yen, split into an interim dividend of 55 yen and a year-end dividend of 60 yen, reflecting the company's commitment to gradually increasing dividends. Mitsui also highlights its strength in having a clear path to long-term earnings growth through strategic investments and ongoing initiatives. Once the current medium-term management plan ends, they plan to set 120 yen as the new base level for full-year dividends. Share repurchases have been carried out flexibly, and all repurchased shares have been canceled to enhance per-share capital efficiency, and the company will continue this approach going forward. While this year's financial outlook is conservative due to the uncertain global environment, Mitsui has consistently delivered strong performance near 1 trillion yen in both profit and cash flow. Over the past 2 years, it has balanced investments in growth with shareholder returns, maintaining a high ROE, return on equity. Looking toward 2030, Mitsui aims to establish a foundation capable of consistently generating profits over 1 trillion yen, or roughly $10 billion annually. To withstand global economic uncertainty, Mitsui will leverage its diversified, high-quality business portfolio and continue strengthening operations across key regions such as North and South America, Asia, including Japan, and Australia. Although profits declined this fiscal year, the company has announced a progressive dividend policy and plans to continue regular share buybacks, so shareholders can still expect solid returns. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,790 yen as of May 1st, and the US dollar stock price is $387.14 as of May 1st. Current PBR is 1.06, and PER is 10.4. Dividend yield is 4.15%. Compared to the last few years, PBR, PER show that stock price is relatively higher, which means current stock price is higher than past. However, the dividend yield is higher than before. As a result, Mitsui's stock price has slightly decreased after this announcement, but the dividend yield has risen above 4%, and Mitsui has also declared a progressive dividend policy. So if aiming for long-term dividend income, the current stock price is not considered high. Conclusion. In recent years, Mitsui & Co. had been achieving both revenue and profit growth, but profits declined in the previous fiscal year, and another decline is forecast for fiscal year 2026. Although Mitsui did increase its dividend, it was disappointing that there was no additional share buyback this time. However, since the progressive dividend policy will continue, further dividend increases can be expected in the future. As Mitsui has a high reliance on resource-related businesses, its earnings are likely to be affected by future resource price trends. Mitsui plans to strengthen its non-resource businesses, which raises expectations for a more stable business model going forward.